You need to grow your money to beat inflation and also to beat the increasing recession in the market. So regarding this, how to grow your money, I have previously created a video on that. So if you have not seen that video, so after this video you can go and see that video itself. In this video, I will talk about mutual fund, which is one of the instrument of growing money with a minimum amount of risk. So in this video, I will talk about different questions about what, why, when, where. So after going through all these things in this video, you should start your journey in the mutual fund, and you should pick up some fund and start in 2023 itself. I'm Subhasish Chakraborti. I'm a technologist. I am a speaker, and also I like to create different videos in YouTube. Now, what is a mutual fund? Mutual fund is basically a pool of money from the retail investor, which is being accumulated and also reinvested in different areas of the investment. So, as a mutual fund, you can diversify the investment in different areas of the market. So, there is a fund manager which basically manages the pool of money, and that fund manager is basically invest that money in different money instrument. So as a mutual fund investor, you do not need to go and find the stocks in the market. You do not need to invest in the stock or share market. And the benefit of the mutual fund is that if you want to invest a very small amount of money, maybe a 500 or 1000 or 5000, you can go and directly buy some mutual fund unit for that. And in stock or share market, it is not always possible. Say for a particular stock, that particular stock itself can be quite high. It can be 5000, 10,000, 20,000. So to buy only one stock, you do not have that much of investment to invest in that particular stock itself. But in mutual fund, what happens is that the mutual fund manager is basically collect the pool of money, and with that the investor is basically distribute that money in different or diversified money in a different company or in the different instrument, so that with a small amount of money you have the opportunity to diversify your investment itself. And the second important thing is that mutual fund manager in the mutual fund, so he is basically quite experienced, so he knows that he can diversify the money, he can changes that money diversifications time to time. So with that we have the expertise, we buy the expertise from the mutual fund investment itself. So when we should invest in the mutual fund, that is the when part of the things. So mutual fund investment should be started as early as possible in the careers, maybe in your 20s or in your 30s you can start investing in mutual fund. The good things about mutual fund that you can either invest your lump sum money in a mutual fund itself, or you can do a systematic way of investment. You can do it monthly, quarterly, or in a week itself. At a fixed amount of money, you can directly create a mandate with the bank, so that that money is being debited every month, and that is being invested in your mutual fund. It can start with even 500 or 100 rupees or 1000 rupees itself. So there is no time period of when you should start, but you should start the mutual fund investment as early as possible because of the compounding effect. So the more time you stay in the market, the more is basically the possibility to grow your money manifold. Now the next question is that in a mutual fund, where we should put the money itself. What are the different types of mutual fund? So mutual fund is basically can be a equity mutual fund, a debt mutual fund, and a hybrid mutual fund. So equity mutual fund is something which basically invest in stock and share market. The debt mutual fund is something which is basically invested in the government and the corporate bond. And hybrid mutual fund, as the name suggests, it is a combination of equity and debt mutual fund. Now coming with the equity mutual fund, this is the most lucrative mutual fund where with the risk you can magnify your or maximize your investment out there. In the equity mutual fund, the money is invested in the stock and the share market. So as I said before, that with a small amount of money you can diversify your investment in different company stocks and shares. So what happens in the equity mutual fund? There are different types of equity mutual fund. So there can be large cap mutual fund, which basically comes at first top 100 companies in terms of the capital. Your money is invested in that mutual funds. If you buy a large cap mutual fund, that means your money is invested in the top 100 companies in the market. Now what is basically the mid cap mutual fund in terms of the capital? The mid cap mutual fund is basically any companies from 101 to 200 positions, your money is invested in those companies itself. And the small cap is basically any other companies outside this top 200 or top 250 companies, your money is invested. Now in terms of risk, the large cap mutual fund, it is a minimal risk among the other mutual fund, because the companies are large and the company's growth is stable. But the thing is that the return is basically not very high on that range, but still you can get around 10 to 12% of growth in the large cap mutual fund. In the mid cap mutual fund is basically a little more risk than the large cap mutual fund, and in the mid cap mutual fund you can expect around 15% on an average to grow your money itself. and in the small cap mutual fund is basically a very high risk for the mutual fund, and that small cap mutual fund sometimes grow, sometimes shrink, so the graph can vary, but there is a chance that you can get a return more than 20%, 25% in the small cap mutual fund. So for investing in the mutual fund, you can basically buy due to your purpose of different types of mutual fund. Some amount of money you should put in the large cap, some amount of money you should put in the mid cap, and some amount of money you should put in the small cap zones. The distribution could be that the more money you put on the large and the medium money you should put on the medium scale, and with the little bit of money you can put on the small mutual fund. And now coming to the debt mutual fund. So debt mutual fund is something which gives kind of with less risk, some fixed return, but that can be more than the fixed deposit kind of things. And in the hybrid, basically you do not want to go to the equity or stock market directly, but you also can balance your portfolio by buying some hybrid mutual fund. Another question is basically the how part of the mutual fund, how you can buy mutual fund. You can buy mutual fund directly from the ANC. So for example, if I tell you to buy some mutual fund or suggest you to buy some mutual fund from the SBI, a large mutual fund or mid-cap mutual fund, then you can directly go and create the sbimf.com or sbimmutualfund.com. You can create your login out there with some online KYC. This process is very simple, and in that you can choose the mutual fund that you want to buy, and you can just go and buy the mutual fund as a lump sum, or you can also create some SIP. SIP creation is little bit more tricky in the sense that you can need to create a mandate with the bank. Mandate is basically you can tell the bank that every month you give the permission to the bank for the mutual fund to get a certain amount of money to be debited and to be invested in the mutual fund itself. Now, on the other hand, if you want to get some mix of mutual funds, say for example, some of the mutual fund you want to buy from SBI, some of the mutual fund you find it good in the Axis mutual fund or some other thing else, that in that case it will be difficult. You need to create different login or different portfolio in different ANCs. So instead of that, you can create a brokerage account with some broker, and in that itself you can create some demat account, and with that you can do transaction about the mutual fund. You can invest, and you can also sell your mutual fund itself. Now there are a lot of other things of this mutual fund. You need to monitor the mutual fund at a certain interval of time. You can go and log in the mutual fund account, and you can see that what are the mutual funds which are performing well. But in general, mutual fund is basically for the long term purpose. It is basically at least 3 to 5 years you need to be stay invested to get good return from the mutual fund. And if you stay invested for 7 to 8 years at least, then there is a high chance that you will always get a positive growth and a very good growth from the mutual fund itself. In conclusion, mutual fund has some risk, that is no doubt, but the return is much more if you compare about the risk. So with risk, you can magnify your return itself. So I just try to give a good summary and try to answer different questions of which, when, how, where, what about the mutual fund. If you have some question or if you have some comments about my video, please go and give some comments my video itself. And if you like my video, please press the like button, and I would also request to provide the subscription button itself, so that I can grow and I can put more videos like that. And this is a channel where I make to create some fundamentals clear of different topics. So give your comment, give your suggestions regarding that, and if any new topic you want to explore, then I will try to include based on the feedback and suggestions. With that, Subhasish Chakraborti signing off.